Good morning and welcome to another episode of Not Your Money. Today we're going to dive into a bit of history with Marco, and we're going to explore what happened over the last 100 or so years. I think it's a very important and often untold story. So welcome again, Marco, and look forward to hearing and discussing what happened with Bretton Woods. What is Bretton Woods? What happened in 1971 with the Nixon Shock? There's a lot of history there. So let's unpack it, Marco, and let's start from the beginning. Why don't you tell us what is Bretton Woods, what led to Bretton Woods, and we can take it from there.
So first of all, let's start from starting point. Bretton Woods. Bretton Woods was that big economical conference that happened in the 44. Was a conference that was mainly pushed by Keynes and was requested as a growing concern of what happened in the previous years. Of course, most important thing, what happened in the 44, like we were at the end of the war. So that the World War II, that was clearly the major thing. So there was this this great push for the Allies to start thinking about reconstruction. That was the main thing. And given that the experience of what happened before World War I, the Great Depression, the economical imbalances that existed at the time, the nationalism and protectionism that was part of the economical movement of the early 20th century. So there was a lot going on, a lot to rebuild, and as every time that there is a war, basically a war is a kind of a great reset. It was the time to develop a new system, and that new system has to be built somehow. And there was major forces clashing in that conference. The major forces were basically U.S. versus Europe, and the rest. I would say the rest of the world, which meant basically all the other unaligned parties at that conference. When I say Europe, mainly I'd say UK, okay, because Europe at that time was, now we have a completely different perception, but at the time was basically completely destroyed. Place. Like you had Germany, who was almost been completely destroyed, burned to the ground to a certain extent, especially the eastern part, but also the western at that time was extremely destroyed. So it was not that superpower that it was before. France and Italy as well. When I say why mostly UK, because this is the only country that managed to resist, even though with great damage to their economy, and still had an empire at that time. So economically, it was the superpower in Europe. And once again, but nothing comparable to the US, who made great effort in the world, but didn't face the destruction in their own country. So that was the result of it. And what happened? So going to what was the outcome of that conference was, again, trying to build something stable for the future, because the US, what they were thinking is like, we want to build something sustainable, but nothing that has not going back to what was the previous system that led to World War II. So that system was the system in where basically, if you can go next slide, basically generate a system where you have the US and the US dollar specifically has the base currency for every single for the global trading market. So first you establish a global trading market that would allow everyone to develop and to grow, but the base currency of the system is dollar. So it's the US economy, and the dollar was pegged on fixed rate against the gold, because that way you remove the devaluation of each currency everywhere, because everything was backed on something physical, and that limit, if you want, there was a threshold. The threshold was gold. So threshold of gold everywhere was the pegging, was the basement, right, for currencies. And what currencies could be used? Dollar. The only currency that could be used for global trade was dollar. Global trade was basically, we can see it at that time as the major boost for any single economy that was engaging in a development, that was trying to develop itself, because protectionist country that didn't want to build, in a completely isolated environment versus a globally trading country, there was clear there was absolutely no competition. Protectionism couldn't work and could not generate anything comparable to globally traded country.
Yep.
And so that's the right. So it's like, okay, I give you the global trade if we engage in having dollar everywhere.
So the US dollar becomes effectively the de facto global reserve currency, from which the petrodollar will follow years on, the euro dollar. So everyone has to hold dollar effectively to engage and interact in global trade. But maybe just one anecdote, might not be obvious to most, but this isn't fundamentally new. Throughout financial history, from gold was used as the peg, if you like, of global economies for centuries. It hadn't been orchestrated this way with one single currency as the base linking all others. So the pound was linked to the gold, the German mark was linked to the gold, the French franc was linked to gold, and so on. The florin before that, the guilder before that.
Yeah,
But in this new establishment, the US prevails as the dominant economy and the dominant currency worldwide.
Yeah, I would say this, like that idea of gold everywhere was like pegging was it's very gold. The difference here is that we are talking global. So for the first time, we establish a system recognized by everyone in the world, where there is a fixed rate between dollar and gold, and then a agreed ratio rate between the dollar and anything else. So effectively, we are creating that system that was recognized everywhere. Something similar was happening, for example, in the Roman Empire, but that was limited to Roman Empire and its traded partner. But as soon as you move into the trading partner, then they could have their fixed rate at whatever things. And the exchange, it was on goods that was pegged. Here we were, for the first time globally, every single good everywhere traded was denominated in dollar. And since we're doing that, then we go back to the system where gold is the gold standard. It's the pegging reserve, and so everything in the economy globally traded everywhere, all the goods, all the commodities will be will be denominated in dollar, which was backed by gold. So every single country in the world that want to engage in global trade, which, as we have said before, is the thing that everyone recognizes. We must do that because that brings an enormous amount of benefit for the economy. So we have to have gold. We have to have dollar reserve, because otherwise we cannot do the global trade. So it was a double. It's like carrot and the hammer.
Thanks, Marco. That was very clear. So we came from a gold standard in the prior century, and towards the end of the 19th century, we were on a gold standard, but on a one-on-one basis. We went through the wars where all countries took possession of their currencies to fund the war, fund the recovery from the war, or try and one way or another prevail on others, and we know where that went. So Bretton Woods, effectively, as you're explaining, brought all countries back together to repeg their currencies to the dollar, but with the gist of putting to put all currencies back to as a gold standard and using the dollar as the anchor for that all.
Yeah,
I think it's helpful to visualize. I mean, we live in a digital age today, but if we think back at what it meant at the time when communication was limited to the telegraph, effectively, what it actually meant from a settlement perspective. So effectively, US dollar bills and treasuries were moving to Europe and the rest of the world, and gold bars were moving on ships out to the US. So effectively, the US becomes the global reserve of gold worldwide.
Yeah, and I think, like, as everything, systems, I think one of the outcomes of this is, like, system works on the context, the time at which they were established. This system was extremely good, was working very well, and we have seen this, like, it has worked up until a certain time, up until the 70s. But the word in the 40s and the word in the 70s is like two completely different humanities. Okay, societies was completely different. Like in the 40s, World War II, like people were killing each other just because they were country neighbors. In the 70s, we were already thinking about, I want to buy my car. That was the major issue of the people. In the 40s, an Italian was thinking of kill, or the German was thinking of supremacy. So we have to be in the mindset. Today we're in a completely different thing, but already, like in the 70s, we are globally trading. We're becoming rich. Was the thing. It was not taking your rifle and going killing somebody else.
So representatives of nation states joining Bretton Woods, a place in New Hampshire in the US. They agree on this new paradigm. What else was agreed in Bretton Woods, Marco?
Many other things, like maybe we can put like a couple of parentheses. The IMF and the World Bank was created, as that system. Again, at that time, there was the mechanism to ensure to develop countries that were otherwise extremely either too destroyed and very unstable, and they would otherwise be ravaged by unchecked inflation. So you put there like a global bank that would support reconstruction, that would support and a fund, the International Monetary Fund, that would support investment, that would support stability. So you have a two-pronged mechanism of investment and banking support, so currency support and investment support. Again, to a situation in which many countries needed to be rebuilt from scratch. Basically, it was, almost absolutely nothing due to the consequence of war. I'm thinking about, for example, Japan. Think about the consequence of two nuclear warheads deployed. Some part of the country either were too, it's like a backwater country, like either too not enough developed, or if they were developed, they're completely destroyed. So they have to be initiated to a new system, and that required global institution to support the development. It's interesting, I think, to see, like, in this context of where societies and where countries were in the context of at the time, and what those institutions have evolved to be in the modern times, which you can think about today's, or because the institution is the same to a certain extent, but the context around it has shifted so much that then those institutions have shifted their goals, right? Because we do not have today, to a certain extent, those type of situation anymore. We don't have countries that are devastated by war, famine, completely, that needs to be pushed into the modern times. We don't have that situation. We have completely different. We have the last in Europe, for example, the last activity for the IMF was Greece. Greece was going through a major financial issue, but it wasn't a destroyed country. I mean, people were going out in lavishing holidays, great resort, as well as there was problem with the specific financial issue for the country. But it wasn't a country that needed to be rebuilt from scratch because there was ravine everywhere, or because it was countries that was completely destroyed by bombardment. That was not Greece, and it has not been. And so the tools were different, right? The purpose of those institutions at the beginning, when they were created, was a completely different one. And then when they kind of outgrow the need and the purpose for which they were built, they switch and they kind of shift their vision and their purpose to something else.
Yeah, I think we're going to need an in-depth deep dive into the World Bank and the IMF, because indeed they have turned out to be quite different to what they were presented to be at least at that time. Let's move on then. So what happened? Okay, we have a new world economy where all currencies are linked to one another. The wars are over. What happened to the economy?
The economy went. I mean, we could put it like this: it went well. The system worked. Economy started to grow. Actually, it became even like it went too well to a certain extent. Like the system, the society outgrew the system. The system that was superimposed was Bretton Woods, right? Like what came out, that was the system. That's we saw before the slide we see before. That was the system was superimposed over the world to guide the world towards growth. That worked well. The problem is that now the society and the economy that we generate was bigger, was outgrowing the system that was superimposed. So now we see that the system was a limitation. We started to see a system as a limitation of the growth and the well-being of everyone. And that's the limitation of Bretton Woods. It's like at a certain moment, it doesn't serve the need of the people anymore. It was not a viable way for it. And why so? Because basically we started to see the limitation. What was the limitation? The limitation was pegging everything to gold, was limiting the growth power, the global growth power. As the world started to come together in global trade, in many countries starting to rise. We had China, we had Europe completely rebuilt and growing. We had the overseas, South America. Now suddenly the limitation was the US, because the US was growing immensely, but it was importing a lot of goods, but was not exporting as much because it was basically too rich. So that their internal economy was strong. But the problem is that facing outwards, they simply didn't have enough gold to sustain all the demand in dollars of all these growing countries. And so what happens? It happens that either you go into a new depression for the US because simply defaulting on their system. I cannot pay you back in gold anymore. I only have dollars for you, which I can print indefinitely if I can break that peg with dollars, with the gold. Or I change the fixed rate. By changing the rate that was fixed since the beginning was a worse option to a certain extent, because it would be generating a lot of, you don't generate a lot of trust that way. So the other option was what Nixon did, was saying, you know what, we outgrow the system that we imposed in the 40s, and now we do not require anymore the gold to be the pegging, to be the backing of our economy, of our financial system. We will.
Just before we get into 71, though, Marco. So let's just recap. The gold that was denominating a hyper expanding US dollar-based economy was no longer sufficient in a fractional reserve banking type of perspective, right? So it's the underpinning monetary base, gold, wasn't able to support the growing level of trade. And in a scenario of skepticism, which I understand there was at the time in France and Germany, for instance, where European counterparts were starting to become a bit skeptical around the trustworthiness or the redeemability of their treasuries back into gold.
Yeah.
And that also was happening at a time where, let's not forget, the US was fighting a war in Vietnam, and therefore having to face with the realities of needing resources, otherwise power, and therefore money, which, as you explained earlier, during the wars, they had infinite liberty to manipulate in a floating rate monetary standard. So that was no longer a tool available, and that's what led to a new change in the system.
Yeah, but I think it makes sense to see it like this. Yes, of course, there was a war, the Vietnam War, but it was just when a system is not working anymore, is too constraining, then you have some cracks here and there. And the cracks were just the last drop, was the Vietnam War, whatever. But even without those wars, even without the contextual issue at that time, that system could not sustain the global growth for one simple reason: there was not enough gold. If you fix it, it's easy to understand this. Yep. If we fixed a ratio, that rate was a certain amount of dollars per ounce of gold. And that was calculated at some point, right? Calculated by how much gold exists versus our strength of the economy, of US economy. But the amount of gold grow in time, but not as much as the growth of the economy. Because the economy is something that, it grows with human population, it grows with the human population in the 40s, also thanks to the war, was not the same of the human population in the 70s. And it's not in any way that the human population that we have today. It's something that can grow fairly fast compared to how much gold we can extract and we can find. So generating that system that was created in the Bretton Woods allowed for the economy to grow so much that now the limitation is the amount of gold. And then, as you say, then you start to have what was the crack in the system was the Vietnam War was starting. We start to have a lot of skepticism in Europe, say in anywhere. It's like, we don't think that the US will be able to switch on demand to swap dollars for gold at the rate that they establish at Bretton Woods, because that when you have a pegging, it means that at any point in time you can swap that currency, that asset, the currency that you're printing with the asset that you say you're pegging to. So that's must work.
We had a real liquidity crunch,
yes,
effectively, right?
Because gold was not fractionable to a certain extent.
So I think this is a good segue to play a short video. I'm not going to play all of it, but I think that there's about a minute, which I think is very telling, from this announcement from President Nixon. And I'll start from here.
Around the world. In the past 7 years, there's been an average of one international monetary crisis every year. Now, who gains from these crises? Not the working man, not the investor, not the real producers of wealth. The gainers are the international money speculators. Because they thrive on crises, they help to create them. In recent weeks, the speculators have been waging an all-out war on the American dollar. The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
I'll stop there, but I mean, the key words to me are defending the greatest country in the world from speculators, international speculators, who effectively were countries just seeking to redeem their treasuries back into gold, and therefore putting pressure on the dollar. But the other key word that strikes me is the decision Nixon made in 1971 was to temporarily suspend the dollar from the gold standard. And we often forget that decision, announced in worldwide television, as we saw in this video, remains the prevailing standard we inherit in today's standard. We're living in that temporary standard that was triggered in this exact moment, and we've not changed since. So what are your thoughts, Marco?
Yeah, it's important to almost 50 years ago, even more. So we have enough time. I think enough time has passed to do like most what historians teach us to do, which is take a step back and try to remove the temporary, talking about temporary meaning, like as an historian, like the things that make sense at the time and the pressure and the issues that Nixon was facing there, which is non-important to a certain extent, that will otherwise cloud us and make us blind to the bigger truth. Trying to understand, those bigger movements in history that happens, so that you can connect event one to the other. And here, like what he said about, for example, as you correctly say, speculators. It's not speculators as there was an attack, otherwise it would have worked. It's just that the system was not working anymore. And the system was correcting, and the market was correcting itself to a certain extent. It was nature, the natural tendency of humans of finding a system that is not working anymore and trying to replace it by attacking it and bringing it down. And that attacks are totally normal in any events that has happened. The barbarian attacking the Roman Empire was a symptom of a system that was not working anymore. Speculators, which of course they were private speculators, but also countries not anymore feeling the pressure of what happens if at some point, with all these dollars that I have in my central bank, I cannot redeem them to gold anymore, or not at the price that it was established. Then my whole economy, which is based on that preset, doesn't work. And then introducing, I think the next thing is introducing this new concept, which is the concept that we, as you correctly say, that we are working today. How do we solve that impasse? It's introducing this new concept, and the concept is the strength of the dollar is not because of how much gold we have in our reserve, which was Bretton Woods, is the strength of our economy. So now we are replacing the gold.
Just before we dive into that, so let's be very clear. Nixon referred to the suspension of the redeemability of the dollar into gold, right? So that the gold layer you showed earlier in the previous slide from Bretton Woods disappears. Now the value of the currency is effectively every currency is a free floating currency. They're all essentially
technicality. That's the technicality of it. So yes, you can. So the suspension of that redeemable against gold, the mobility against gold means now you have $1 billion or you have $1 million and you want to exchange it with the equivalent amount in gold as per the rate established at gold Bretton Woods. Well, that's not anymore possible. You cannot redeem gold. If you want gold, you go and buy yourself gold, but don't come to the Treasury, U.S. Treasury to exchange your dollars for gold, which you could have done up until that time. Effectively, U.S. dollar became a free-floating currency, and since everything was pegged on U.S. dollar, then everything became a free-floating currency. And that's, like I said, the concept. The concept of introducing that Nixon has introduced is the fact that we do not need to be backed by gold, which is a system that we trust because it's limited in supply and because throughout history has worked as the pegging. Like gold, we say it's gold, right? And we replace it with the trust, this is the key word, in our economy, because the US economy, as Nixon saying, is by far the strongest in the world. Again, look at it as an historian. So step back, look at that. If you try to have a globality in your vision, you have a global approach, in your vision, try to abstract from the specificity of where you live in the humanity timeline, right? In the 70s, that was the reality, right? US was the biggest strong economist. It is still today, but the differences have smoothed down a lot. And it's not now is not anymore the same difference in gap of the US economy that we saw before. And still, you are replacing something that is measurable, right? The supply of gold, although it grows and to a certain extent, but it's very, very measurable, to something that is extremely more volatile and less measurable, because all the measure that we have for an economy are indirect. It's not like gold. There is a certain amount. We know how to measure that, right? We have a very, very precise and clear way of doing that. For an economy, we have a way of measuring it, but it's relative to the rest. So now we are in a new system where everything is much more fluctuation. It fluctuates much more, and also it's based on belief.
Yeah,
it's based on the belief that the strength that this economy is strong. Yeah, okay. The true that number showing how much an economy is producing, but that number, that's the key factor to me, is that is valued in dollars. Before, the amount of gold is measured in kilograms, ounces, whatever. It's a measure of weight and purity. Nothing to do with the dollar. Nothing. And then you peg the dollar to it. So you have a measure and another measure. And then you merge together. You use one, you superimpose one on the other. Now you're measuring the strength. You are pegging your currency on the strength of your economy, which is measured in your currency. Right? So now you are
absolutely crystal clear.
You are in the same one and the other. The right hand and the left hand, they are both attached to the body, right? So it's not like separate things.
So maybe just to add, we kind of implicitly stated this, but as Nixon took that decision, given it was a global gold standard, that implicitly affected the whole world. So not only did the US temporarily depeg and suspend the convertibility of dollar into gold, but so did all other countries, which obviously had their own currencies no longer linked to gold and its underpinning, well, to dollar and the underpinning gold. So we enter the world of free-floating exchange rates, which we still have to this date, where, as you say, not just for the dollar, but for every other currency, the power and the trustworthiness of any given currency is effectively a signal of the trust and strength of the underpinning government and central bank. And as we know it, I think to date there are about 160 or so currencies worldwide. There are probably, let's face it, about 5, 10 large-scale currencies that have presence in the world. There's a very, very long list of countries and currencies that are everything. But I just this morning I was looking at the trend of the last 5 years, for instance, of the African economy, for argument's sake. But the same can be applied elsewhere in terms of its depreciation over time, its purchasing power devaluing over time, which, by the way, affects every other currencies, including the dollar. But I think we're jumping away. Let's get back to the journey you're bringing us on, Marco. Help us understand what happened next. Then, what are the impacts of the depegging free floating exchange rate?
This has been one of the biggest so far, like in terms of the impact that we perceive today. Clearly the Bretton Woods, looking from today, the Bretton Woods in terms of impact still has some has been, as we have seen with Nixon, removed. But we have seen the effect, like the global growth, some institution has been put there, the dominance of the US. The Nixon shock, or we call it like this, but let's remove the person, right? The removal of the gold standard, and everything is a free floating currency, without removing the US as a dominance, or the dollar as the dominant currency, the base currency in the world. And just to explain what I mean is that worldwide, debt of most country in the world is denominated in dollar. Dollar is the reserve currency. That when we say this, the reserve currency, that what we mean. It means that when external investors come to buy your public debt, they buy it in dollar. They don't buy it in whatever currency your country has. Okay, that's important. All the commodities in the world are denominated in dollars. That means if you are oil company, grain company, whatever other type of commodity, platinum, palladium, whatever, you trade that in dollars. So your partner gives you dollars, doesn't give you euro, okay? Unless that other partner is, for example, in Europe, is partner of the European Union. But if you're selling to an Indian, and you are in France or in the European Union monetary zone, you still pay in dollar, and then you swap. So that part is still there. We have removed the gold standard. Now what happens? So what the effect that we see today is that basically now the economy is free to grow in notional. But now since we are not pegged anymore to, like I said, something that is not denominated by the same thing you're trying to peg, but was measured in kilograms, was measured in purity, right? So it's something that is separate. It's important. It's separate. It's not that it's solid. It's separate from the thing that you're trying to peg, which is the thing you're trying to measure. Okay. Now that effect that it has, economy is growing every time you print money. But the effect to the people is that these people do not, like the humans living in that society, globally do not perceive a growth. Why? Because you are effectively diluting their purchase power.
So that's what we're
the
seeing
economy
here
has
on
a
the,
global growth because it's measured by the very thing you are printing.
that's what we're seeing here on the graph, Marco. So the productivity kept expanding, but
Yes.
the net effect on the average consumer in terms of their hourly compensation changed dramatically from that moment.
Yeah, because basically we kind of, let's put like this: the hourly compensation stayed pegged to the dollars, to the gold, and the gold has now expanded in terms of quantity, but the amount of dollars we can print is infinite, and that is the measure of economy, as we have explained before. So that keep expanding with the printing of more dollars, but the actual compensation in terms of purchase power just didn't change. Stay where you were compared to the dollars, and that's that creating that effect. The purchasing power is not changing compared to the gold, but since we are printing more dollars and we're measuring that in dollars, you are diluted. Imagine it as if we are all. Francesco has a company. We are all shareholder of Francesco company. Then Francesco every 10 years or so just generate more shares. And what happens if you don't buy more? Well, you're diluted. You're diluted. You're diluted. Every single time you're diluted. And that means that my governance power in your company, Francesco, is lower and lower every single time. Because if before I had 10%, now I have 5%, then later on I will have 2, and then 1. That's my real purchase power, because we are printing so much more money, and people do not understand that this affects them. It doesn't go when they print when central bank prints money, and then but it's locked away in banks and we don't feel it. Oh no, you feel it. You feel it because more and more, since this is the measure, is that dollar that we print is the measure of your economy. When your economy goes up, equals that everything becomes more expensive, because it's the only way you expand, right? It's making more things, and the things that you still have just getting more expensive.
So it's no secret. We've seen loads of charts. We've shared other charts similar to this one we're watching now on the screen in previous episodes around the declining purchasing power of currency, not just the dollar. Take any currency, any major currency, and I alluded to the African ones that are, or let's call them underdeveloped markets that are seeing staggering levels of depreciation, which is, I guess, the inverse of the inflationary pressure in those markets. But what I find interesting in this chart, Marco, is inflation and therefore devaluation, decrease of purchasing power, is not solely a factor of convertibility into gold or an anchor or not. As we can see here, between 1944 and 1971, the dollar's purchasing power is decreasing despite being on a gold standard. So it's not just having an underpinning anchor of, let's call it, sound money, but it's also the debt mechanisms you alluded to, the fractional reserve layers that sit above that. So how much money, if you like, do you print in circulation, do you distribute in an economy anchored to the base layer of money, which was gold? And as you add it all up together, you end up with these sorts of scenarios. It does bother me, I must say, that so few people really appreciate what this looks like and what this means. We tend to think of depreciating currencies or purchasing power changes year on year, perhaps at the gas station or in the grocery store, but we never really think or take a wider view at what happened in the last decade or 50 years or 100 years, and why is that?
I think, we can draw a really simple parallel, or simple to a certain extent. Why we don't see this is because there are so many layers that are built on top. It's like a house or a building, right? If the foundation, the monetary policies and the monetary system is the foundation, and then you build everything on top. The problem is that we have built as humanity with finance and banking a lot. We have built a huge skyscraper. So it's difficult, as you say, sometimes to step back and see things. And we have a very good example of a system that was built little by little on top, and then it crashed. It was the real estate crisis. It was the 2027 crisis. Okay, that crisis was the example, the real example. If your mortgage, which is the base of the whole system, right, is fragile, then you start to create so much on top. People at the top, not people at the top, everyone at a certain point just lose track. And nobody was predicting the real estate market crashing, except few people. But those few people, if you've seen what happened at the time, what they did is they go back to fundamentals and then start to realize, wait, this is not sustainable with this amount of leverage, this amount of price. So everything crashed because it was the system, the foundation of it were not solid enough to sustain that huge skyscraper that was built on top of it. That's the comparison. Here we are building the issue that we're starting to have with the quantitative easing, with printing enormous amount of debt, enormous amount of money, is that it's a symptom of the system that is not sustaining anymore that enormous building that we have built on top of it, which is the global financial system and the banking system with the reserve, with the fractional reserve. Trust is not generated out of nothing. And if you don't have the gold pegging system as before, that you can trust because it's there and it's measured on a different scale, then you have the issue that we have today. How we repay the debt? We print more money, but that's what generates more debt. And then how you repay the debt? You print more money, and so.
Thank you, Marco. We had a whole episode on trustworthiness of money, debt cycles, and inflation last week. So, yeah, very, very telling, very insightful, and hopefully the viewers can make their own minds up as to, or at least understand where we come from, what system we inherit, and why this is a real problem that needs to be solved. Our economic system was temporarily triggered in 1971, and I don't think it really is any longer fit for purpose for today's highly digitalized economic system running at speed that requires a firmer monetary base once again. We'll get into the details of what we think that should look like in future episodes. Marco, any closing remarks from your side?
Yeah, I mean, just for as always, this understanding and knowledge of what happens, how does it works, it's always super important. We do not have enough education on this subject, unfortunately. We have a very, very strong education on the technical aspect of other stuff, but not many people has this teach about this global understanding of things. And as we see repeatedly in history, is those who manage to find solution are the ones that are capable of understanding the problems. So in order to understand the problems, we have to take this large step back and see things in its entirety.
Well put, Marco. I mean, that's why we're here, right? Not your money. We'd love to talk about crypto and the disruptive nature of DLT technologies, but we need to understand the basics first. We need to understand what economic and monetary system we're in. I personally believe that financial literacy should be a human right. It should be taught in schools. I read economics at university. I did business schools. I spent 20 years in banking, and never once was it even questioned as to what the status quo looks like. And it does my head in, frankly, to have discovered it far too late, or really questioned the whole paradigm we operate in.
And can we say, which is I think it's important, the charts that we are showing are made not by us, are publicly available, first of all. Second of all, are made by the very institution, most of them, that are part of the system, part of this financial system. Most of it comes from the Fed. So it's not like this is hidden data that
not at all.
The schools
There's no conspiracy
not
theories here.
Exactly, there is no conspiracy theory.
Sharing the data.
And it's not like the university do not have this data, or they contest this data, or it's like, oh no, this is controversial. It's not controversial. It's published by the institutions. It's published by the establishment. So it's not ours. Right? So that's important.
Thanks again, Marco. So yet again, before entering the world of crypto, learn about money first and then step in bit by bit. I hope you enjoyed our video. If you found the video informative, please don't forget to follow our channel and click the alarm button to be informed of new videos coming through. There is plenty to learn and get your head around on your journey to mastering crypto. Thanks for watching, and see you on our next video.